Today, I'm covering the 3 black swan events that could crash Bitcoin and cause a market collapse before the next bull run starts. And make sure to watch till the end because I will reveal how Blackrock is using their spot ETF to secretly control the entire Bitcoin blockchain. Welcome back to the Virtual Bacon channel. My name is Dennis. I'm a crypto angel investor for the past 5 years and I have invested in over 100 companies. On this channel, I share my views on market trends and investing strategy that I use to build wealth with crypto. Since the bear market bottom, Bitcoin has recovered significantly and even touched the 30K level again. Tons of people were calling for 40 to 50K last month and saying the Bitcoin bull market is back early. However, I have stayed very cautious on our live streams week after week. I kept warning people for Bitcoin to have one last correction and 30K was likely the local top based on the indicators. And so far it has gone exactly as I expected. If you want to see my long-term entry targets for Bitcoin going into the next cycle, I have a full video for this. I'll leave the link in the description. Long story short, the Bitcoin cycles don't start this early. The Bitcoin halving is still some time away and the Bitcoin ETF won't get approved this year. Plus, there are 3 major black swan events that could cause another market collapse to crypto this year. So let's get into it. The first potential black swan event you need to watch out for is around Binance. There is a small chance that Binance could go down this year due to pressure from multiple fronts. The SEC alleges that Binance secretly allowed high-value US customers to continue trading on the exchange, and the Binance US platform was entirely controlled by Binance Global and was used to get around regulations. The SEC also claims that Binance commingled customer assets and transferred them to other entities that are controlled by Binance CEO CZ. They brought together 13 total charges against Binance, calling it an extensive web of deception, conflicts of interest, lack of disclosure, and calculated evasion of the law. CZ is also personally sued by the CFTC for offering derivative tradings to US customers. Now, these lawsuits on Binance are much more serious than other cases in crypto around security laws. The matter is not just about which cryptos that Binance offered on its exchange as potential securities, but it concerns the Binance exchange activities breaking the law. So even if Binance complies with the regulators and delists certain coins, it still wouldn't be enough. The regulators essentially want Binance to shut down all its trading businesses in the US. At the core of the Binance conflict is the secret initiative called Operation Chokepoint 2.0. This is a calculated move from the US government to cut off crypto-native platforms from the US banking system in order to kill their businesses and let their Wall Street friends take over the crypto industry. To read more about Operation Chokepoint 2.0, Nick Carter has an in-depth story covering all the actions that US regulators have taken so far. And this extends way outside of crypto and even involves the SVB collapse and the Signature Bank collapse. The founder of Cardano, Charles Hoskinson, also pointed out that the SEC's complaints on Binance is a series of many steps to cut off the crypto industry giants and replace them with CBDC-partnered massive banks. Under all this pressure, here are all the damages done to Binance so far. Number 1, Binance is close to shutting down its US exchange arm for good. The cutoff from US banks also means Binance could start to have trouble withdrawing real US dollars for their customers. This is not because Binance doesn't have the assets, but rather the exchange is having a hard time converting these assets to real US dollars to be deposited in US banks. The Binance BUSD stablecoin was also shut down in early 2023, which caused the stablecoin to completely stop minting. And now the BUSD stablecoin can only be redeemed and burnt. The SEC even requested to freeze all of Binance US's assets, but luckily this was rejected in court. So how big will the impacts be if Binance actually shuts down? The short answer is it will kill the entire crypto industry for multiple years. Binance is by far the largest crypto exchange today. The exchange has more than 30 million active users and is responsible for 38% of the crypto market's trading volume. In comparison, the other large players like Coinbase, OKX, and Bybit only have about 5%. At its peak, FTX only made up about 6% of the entire crypto market's trading volume before its collapse. This puts things in perspective. If Binance actually collapsed, all bets are off the table and all cryptos will be dumped in a prolonged bear market. I'm not panicking, however, as I don't actually believe Binance will fully collapse. Unlike FTX, which is actually operating a fraudulent business, Binance's trouble stems from the regulatory pressure. Binance always shows their full proof of reserves accounts directly verified from the blockchain. And these assets are able to cover more than 100% of their users' deposits. Binance has also experienced multiple bank runs since the US regulators began their attack, but the exchange has never experienced any withdrawal delays. First, in December 2022, after the FTX collapse, investors were questioning if Binance had similar issues and withdrew $1.9 billion from the exchange within 24 hours. Then in February 2023, when the SEC stopped Binance from minting the BUSD stablecoin, another $3.3 billion of the stablecoin was redeemed for real US dollars within 1 day. This mass redemption continued for the next 8 months, and over $20 billion worth of BUSD have since been burnt and redeemed for real US dollars. Despite all of this, Binance's treasury still stands strong. In March, there was another $1.6 billion withdrawn in 1 day after Binance was sued by the CFTC. Then again in June, another $1.4 billion withdrawn in 1 day after Binance was sued by the SEC. So we start to see a pattern. Binance is clearly operating a legitimate business and is able to handle all customer withdrawals. However, when the pressure is coming from the US regulators, they can still do damage by cutting off the exchange's banking partners and instilling fear through the media. In 2022, Binance's market dominance continued to rise from 38% to over 62% by the end of the year, when other exchanges were losing trust. However, in 2023, since this crackdown started, the market share of Binance continued to decline to 50% in June, and by August, it's only at 38%. Even though Binance is safe to use and operates as a legitimate business and had no withdrawal problems, it's clearly losing users from the regulatory pressure. Their revenue numbers in 2023 will most likely be lower than that of 2022's. This is the real worry that could cause something to break in Binance. As the bear market is coming to an end, Binance will likely face its last battle with the TradFi cartel. I don't expect Binance to actually collapse since they have proved to be resilient in all previous cases. However, if the US regulators want something to break at Binance, they will have to do so in the next 8 to 12 months before the next bull run starts in 2024 and trading volume picks back up. And if something does go down with the Binance exchange, whether it's a short-term withdrawal delay or a trading halt, it will cause a major crash as everyone looks at Binance as the benchmark for the health of the crypto industry. If you're enjoying this video so far, leave a like and subscribe for more market insights just like this. Next up, let's dive into the second black swan event that could crash crypto this year, and that's the potential Depeg of the USD Tether stablecoin. Tether stands tall today as the most adopted stablecoin in the crypto industry, boasting a market cap of $82 billion and a daily trading volume of 16 billion. It's adopted across all major blockchains and acts as the default trading pair across all major exchanges. However, not everything is smooth sailing, with growing concerns around its backing claims, disputes with major crypto players, and increasing regulatory scrutiny. Tether finds itself amid some significant challenges. The recent issues with Operation Choke Point 2.0 and the banking system have also made it difficult for Tether to meet its real dollar redemptions. While Tether says everything is fine, I'll give you some signs that say otherwise. First, major crypto exchanges like Binance and Huobi are pivoting away from USDT and pushing their own stablecoins like TUSD and FDUSD as their main trading pairs. Secondly, the US Tether stablecoin has already depegged for multiple weeks in July as shown on this chart. This depeg was the largest we've seen since the Luna and FTX crash. Keep in mind that a depeg doesn't have to mean USDT is trading at some crazy low price like 80 cents on the dollar. The fluctuation buffer for Tether is actually around 0.1%, since this is the redemption fee required to arbitrage the depeg away with real US dollars. If all things are good at Tether, then prices should not dip below $0.999 for any extended period of time. The large market makers can dump millions into the arbitrage opportunities and make free money. Thus, the price difference should disappear instantly. That's why when USDT dropped to only 0.9985 in July, it was already considered a depeg and signaled that something is wrong with Tether. A third issue happening to Tether is with a new stablecoins bill coming out of the US House. This bill is called the Clarity for Payment Stablecoins Act. It was specifically mentioned that Tether is a foreign issuer of USD-based stablecoins, which is not allowed. The bill aims to control all USD stablecoins and make sure they are issued from US entities entities with clear audits. This shows where the future is heading for stablecoins, and the banking troubles for Tether will likely only get worse. I have a full video covering this historic stablecoin bill as well as 2 other crypto bills being passed through the US House. You can find that video with the link in the description. And lastly, Tether's market cap is also showing some worrying signs during all this FUD and market uncertainty. Here are the market cap charts side by side between USDT and USDC for the past year. And there's an intriguing observation. While USDT market cap went up in the past year by about 18.5 billion, USDC's market cap actually went down about the exact same amount. Why would this be happening? Most people in crypto know that USDC is much safer and more regulated than USDT. And 2022 was the bear market, so no real dollars were coming into crypto. If anything, USDT should be shrinking in market cap as people move to the safer USDC. The only explanation for this is that USD Tether is having trouble redeeming the stablecoin for real US dollars, and thus USDT is not being burnt and are only being minted. USDC, on the other hand, remains as one of the only regulated stablecoins that can be redeemed for real US dollars, and thus it is being used by other exchanges and Tether to redeem for dollars. When Tether needs large redemptions, they swap their USDT for USDC, burns the USDC and turns it into real dollars for their clients. I have covered this whole conflict in depth of how other exchanges and Tether are using USDC as a fiat off-ramp while they cannot redeem these stablecoins for real dollars anymore. You can check this post on my Twitter and make sure to follow me because I post a lot more alpha on there. Long story short, you want to see a stablecoin's market cap that can actually go down like the one on USDC. This means the coins are actually being destroyed and converted to real US dollars. It's working as intended. This is why I'm more confident holding USDC over USDT right now. Now, without creating too much FUD, this Tether situation won't be like another Luna UST type of collapse. Tether does have the money backing all USDT supply. Tether's reserves are also held in stable cash equivalent assets instead of volatile coins like Bitcoin or Luna. All of their assets can be tracked in real-time audits, which are enough to back all their stablecoins. The real reason is again the banking restrictions from US regulators, which is causing Tether trouble to redeem the USDT stablecoin for real US dollars for their clients. As the next bull run looms on the horizon, the next 8 months will be crucial to watch for Tether. The ideal scenario is for USDT to start going down in market cap slowly and lose some dominance as the default exchange trading pair. But if Tether continues to get minted and inflated, by the next bull run, it will be a ticking bomb that looms over the entire crypto industry. Even if they have all the money to back all USDT supply, they still need to have healthy banking relationships to handle customer redemptions for this $80 billion stablecoin. If people lose trust in Tether, then mass redemptions could reveal their banking problems and cause more fear, which creates a cascading effect to all exchange trading pairs that use USDT. If you want to learn more about Tether and what I think are the safest stablecoins right now, I ranked the top 15 stablecoins and I'll leave that video in the description again. Moving on, the third major event that could crash Bitcoin this year is around the Blackrock spot ETF. And you're going to want to hear the last point because I will reveal how Blackrock plans to control the entire Bitcoin supply and the Bitcoin industry by making a huge move. We know BlackRock's entry into Bitcoin is bullish for the industry long term, and the spot ETF will most likely be approved given their track record. However, BlackRock and its CEO Larry Fink will likely play with the crypto market's emotions for the next 8 to 12 months. Remember, BlackRock is the world's largest asset manager with $9 trillion in AUM. When BlackRock filed their Bitcoin ETF application in July, Larry Fink directly called Bitcoin a digital gold and something that will revolutionize finance.
And also, I do believe the role of crypto is it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country or the devaluation of your currency, whatever country you're in. Let's be clear, Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative. I would call, the foundation of BlackRock is about hope. You invest for retirement because you believe tomorrow is better than today.
But despite all this public hopium, Bitcoin still failed to break above that 30K resistance and is now back to 26K. Lesson in there, watch what they do, not what they say. Yes, BlackRock is getting into Bitcoin, but I think they will want to get in cheap by manipulating the markets. If you want to see the whole breakdown of the BlackRock ETF timelines, go watch my Bitcoin ETF approvals video linked in the description. In short, the real deadline for BlackRock's Bitcoin ETF approval is March 15th, 2024. Before then, anything can happen for BlackRock to get the best entry price possible. So I wouldn't be surprised if there's one more sentiment shift from Wall Street and BlackRock coming in the next 6 to 8 months. First tactic is that BlackRock could continue to tease and delay the ETF approval. We've already seen this a few times. Historically, all Bitcoin ETF decisions gets delayed until the final deadline. So the short-term deadlines will likely not get approved this year. Also, there are two other smaller players filing for their Bitcoin spot ETF earlier than BlackRock, which are Grayscale and ARK Invest. These two ETFs will get their decision dates first, one in October and the other in January. But these two will most likely get denied as the US regulators won't allow anyone else to get in before BlackRock. So the delays and denials could be used as short-term FUD to suppress Bitcoin's price. Second narrative that BlackRock is pushing is to be pro-Bitcoin but against crypto. This ties in closely with Operation Chokepoint 2.0. Look at the timeline of events this year. On June 5th, the SEC filed 13 charges against Binance, the largest crypto-native exchange. Among the charges, SEC declared 12 major altcoins as unregistered securities. This significantly hurt the market prices. But just 10 days later, on June 15th, BlackRock filed for their Bitcoin spot ETF, bringing massive hope back to the crypto industry. Another 5 days later, on June 20th, Wall Street giants Citadel, Charles Schwab, and Fidelity launched their own institutional crypto exchange called EDX Markets. And the only coins supported on this platform are Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. This timing is not a coincidence. BlackRock and their Wall Street friends wants to control the crypto industry by pushing out the crypto native players and the wider altcoin markets. Although they will bring institutions to crypto, they will only handpick a small number of legacy coins that they can control. When it comes to the altcoin narratives that are driven by Binance and the crypto degens, they might never mention them or even do the opposite and make them illegal. The last tactic that BlackRock could be using to control Bitcoin is the craziest one yet. BlackRock might be trying to push Bitcoin through a new hard fork. You see, BlackRock's ETF application has a secret clause. Quote, in the event of a hard fork of the Bitcoin network, BlackRock can use its discretion to determine which network should be considered the appropriate network for the trust purposes. This sounds quite scary to crypto OGs, as we have gone through these Bitcoin network battles before. In 2017, Bitcoin Cash was born and almost overtook the original Bitcoin. Could BlackRock actually accomplish this? Well, we know BlackRock will likely have the largest holding of Bitcoin's supply after these ETFs are launched, which means they can get a large chunk of the new forked Bitcoin for free. And get this, BlackRock is currently the second largest holder in 4 of the 5 biggest Bitcoin miner companies in the world. These are Riot Blockchain, Marathon, Cypher Mining, Hut 8 Mining, and TeraWulf. These mining companies not only control the Bitcoin mining profits, but are also crucial in determining which Bitcoin comes out on top during a hard fork. When a fork happens, the Bitcoin network with the largest mining power becomes the de facto Bitcoin network that everyone migrates to. By controlling these large mining companies, BlackRock could have a strong influence in the Bitcoin hard fork. This would be the ultimate nightmare event for crypto, as a hard-forked Bitcoin would mean that BlackRock can rewrite the rules of the blockchain and accumulate this new Bitcoin as cheaply as possible. They can even make the blockchain completely tracked or even change the maximum supply mechanics to give themselves more Bitcoin. BlackRock can also play into the ESG narrative and create an environmentally friendly Bitcoin that doesn't use mining but instead uses proof of stake for its security. This would make things much worse, as BlackRock would be the richest player in the blockchain with the most amount of stake and thus the most power to dictate the direction of the project. In the meanwhile, all the hodlers of the original Bitcoin could be losing value to this Wall Street-backed competitor. Obviously, this is a super grim and highly speculative scenario, but it's not impossible to accomplish. I give it maybe 5 to 10% chance to happen. In 2017, the Bitcoin Cash hard fork did not take much to execute. All it took was a few exchanges, a large large mining pool, a large mining hardware company called Bitmain, and an influential Bitcoin guy called Roger Ver. If BlackRock wants to create a Bitcoin fork along with their Wall Street friends and the US government, they might just succeed. Just like the other black swan events mentioned on today's video, I don't think any of these have a high probability to happen, but all of them are possible and are all big events that could crash the crypto industry at a large scale. Luckily, all of these events are man-made and all come from one single entity, and that is the US government and Wall Street. If they want to carry out this attack, it will have to be while crypto is weak, which is before the next bull run starts in 8 to 12 months. And that's why I'll be watching all of these scenarios closely, and I will update you guys if any breaking news happens. So definitely subscribe to the channel if you haven't yet. Okay, that wraps up today's video. If you like this content, you should definitely follow me on Twitter at virtualbacon0x, where I drop a lot more unfiltered alpha from day to day that are too quick for these in-depth videos. Also join our Telegram group for daily market summaries and altcoin alerts, and check out our free newsletter all on virtualbacon.com. Remember to subscribe and turn on notifications. Thank you for watching, and see you in the next video.